Denise Ramirez's mortgage payment jumped $770 in a single month. She never missed a payment. She never refinanced. She never got a phone call warning her it was coming. 5 years to the day after she signed her loan, her bank reset her interest rate to match a number the Federal Reserve controls, and nobody at closing ever explained that clause out loud. Here's the mechanism. An adjustable rate mortgage starts with a low fixed rate for the first 3, 5, or 7 years. After that, the rate switches to float against an index called SOFR. The rate banks charge each other overnight for cash. When the Fed raises its benchmark to fight inflation, SOFR climbs right behind it, and on your reset date, your mortgage rate climbs with it, whether your paycheck went up that year or not. The bank then adds a fixed markup on top of that index, usually 2 to 3 percentage points, and recalculates your entire remaining balance over whatever years are left on the loan. That's why the jump feels violent instead of gradual, and why two families with identical starting rates can end up hundreds of dollars apart depending on the day the Fed happened to move. Subscribe now. Tomorrow's rule is even more surprising than this one. As of this year, more than 2 million American homeowners are sitting inside an active adjustable rate loan, and most reset windows land between year 5 and year 7, right when families feel most financially settled and least likely to be checking their paperwork. Some loans include a cap limiting how much the rate can jump in a single reset, often 2 percentage points. But the cap protects the rate, not the dollar amount, so a 2% jump on a large balance can still mean hundreds more every single month for years to come. Lenders are required to mail a reset notice before the change takes effect, but it usually arrives 60 days early, in a plain envelope that looks like ordinary junk mail sitting between coupons and credit card offers. Comment reset below if you want us to walk through exactly where your own reset date is hiding in your loan paperwork, because almost nobody checks until the payment has already changed. That 60-day notice is the only real warning most homeowners ever get. Denise found her new rate 3 weeks after her checking account overdrafted trying to cover the difference automatically. The clause had been sitting in her paperwork the entire time, on page 14, in the section nobody reads before signing at closing. Hit the bell so tomorrow's hidden rule lands in your feed before it costs you anything.